cautious tone on Wall Street this morning ahead of the start of the Fed's virtual Jackson Hole meeting today. Today and tomorrow, we'll be watching closely. We are also waiting on second quarter GDP numbers today and initial jobless claims, both out in 2.5 hours. Federal Reserve Chair Jay Powell is set to speak tomorrow, Friday morning, but most are not expecting an announcement on tapering. Instead, they're looking to September's meeting for more clarity. Joining me right now is Oxbow Advisors managing partner Ted Oakley. Ted, kicking things off with you. I've been wondering if we're seeing the Federal Reserve become a little more cautious about beginning that taper program, given that we've seen some weaker than expected economic data over the last couple of weeks. What are you expecting out of the Jackson Hole meeting today and tomorrow?
You know, Maria, I would not expect a lot. You know, he just spoke a couple of weeks ago, and the other side is that I don't think he's going to do anything drastic because he probably comes up for reappointment in about 2 or 3 weeks. I don't think anybody wants to shake anything up. In addition, you know, we always look for what they're doing buying bonds in the open market, and they haven't changed anything there. They keep buying the same amount. So we don't look for much in Jackson Hole.
Very, very interesting. And meanwhile, Ted, I want to get your take on the macro story. What has changed from your standpoint? We've got companies now implementing new vaccine and mask mandates with a new spike in COVID cases. What impact is the Delta variant having on how you allocate money, on markets, and the broad backdrop of the economy?
You know, Maria, it hasn't changed much of how we allocate, but it certainly has giving people a little bit of pause here because all of a sudden, you know, you're seeing some of it in the numbers. You're seeing it in restaurants, a few things that are out there. There is some good news. It looks like it's peaked in a number of places at least and started back the other way. So I don't know how long that lasts. I don't think it's as strong as it was obviously before, but we haven't changed much in the categories we invest in. I'll say that.
So tell me how you're investing right now.
Well, you know, our two primary categories, which are long-term growth and stocks, and we're still in that area. And then the second part is we have an aggressive income strategy, and both strategies are in the same mode. We're about 25% liquid right now, just because we haven't found the things we want to own in the past 8 or 9 months. But generally, we still have the same two areas. We're looking for growth on one side. We're trying to find companies that grow at 15% a year. On the other side, on the income side, we're trying to beat the bond market by 2 to 3%.
So where is the growth right now, Ted? I mean, the Journal this morning is reporting that publicly listed American companies are now rushing to issue new stock. Obviously, in a record market, this is the time to do it, whether issuing new stock or going public. You want to do it now. Does that play into anything that you're looking at? And specifically, where is the growth?
Well, if you think about it, the companies that can grow at, say, 15% a year over the next 5 years are few and far between. I mean, if you look at the top 500 companies, there's not many that fit that category. That's what we particularly look for. Now, we also think there are a lot of companies, like you mentioned, Maria, that are bringing these public offerings that really are not companies we would want to own at all. A lot of them don't make any money or very little money. And so that's not an area we're looking at. On the other side, we look at where can we go and get income that is, say, 2, 3, 4 points over the bond market. And so there's different categories we look at, but there is some growth there. But it is in a minimal number of companies. You know, that's the one thing. The larger companies today that grow at that level are not as many as there would have been 25 years ago.
You know, it's interesting because we continue to look at earnings estimates coming higher after what was a pretty good earnings season, right, Ted, in terms of the S&P 500. When you look at peak growth and the earnings picture in the future, what does it look like to you? Do you expect that we will see tougher comparisons coming in the coming quarters?
I do. I think you'll see tougher comparisons because if you just think about the base effects of last year and what they were comparing against now in the second quarter, obviously it was easy to beat that number. And so as you go forward, you're going to raise up the number that they'll be comparing against. And I think that's what you're going to get into over the next 4 quarters, Maria.
All right, we will we'll be watching that, of course, and we got a market that is pretty flat today because we're all waiting to hear from the Federal Reserve. Any other catalysts that you look forward to, Ted, in terms of driving markets in the coming couple of weeks?
You know, the biggest thing right now is that there's a big war on of words, Maria, between the people that think we'll inflate and the people that don't think we won't. And I think you have to look at that and see, is that sticky inflation going to stay with us over the next, say, 2 to 3 months? If it does, it probably changes the markets a little bit.
Yeah, and of course you want to, I guess, look for those companies that have some pricing power. We're looking at markets roll over a bit right now. Ted, it's great to get your insights as always. Good to see you this morning, sir. Thank you.
Thank you, Maria.